Ladies and gentlemen, good day and welcome to Apollo Microsystems Q3 FY25 earnings conference call hosted by Anand Rathi Shares and Stock Brokers Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Santosh Yelapu from Anand Rathi Shares and Stock Brokers Limited. Thank you, and over to you, sir. Santosh, sir, your audio is not clear. It is breaking.
Good morning, ladies and gentlemen. Welcome to Apollo Microsystems Q3 FY25 earnings call hosted by Anand Rathi Shares and Stock Brokers Limited. We have with us today Adepalli Krishna Sai Kumar, Director Operations, Praveen Rakhia Madam, the Company Secretary, and Tanya Madam from the IR team. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. The statements are not a guarantee of future performance and involve risks and uncertainties that are difficult to predict. I now hand over the conference to the management, Sai sir, of Apollo Microsystems. Thank you, and over to you, sir.
Thank you so much, Santosh. Good morning, everyone. Thank you all for joining us today on this weekend. It's always a pleasure to connect with our investors and share insights into our performance, strategy, and outlook. I'm pleased to report that Apollo Microsystems has delivered another strong quarter, demonstrating consistent execution, operational discipline, and increasing our market share in indigenous DRDO programs, thus delivering our commitment towards Make in India for past 40 years. To make a line, I would also like to specifically mention that on this January 30th, we have completed 40 years of our relentless effort in contributing to indigenous defense programs. Let me first take you through our consolidated performance for the 9 months and third quarter ended December 31st, 2024. 9 months FY25 versus 9 months FY24. For 9 months FY25, revenue from operations has increased by 69.5% from 2,362 million in 9 months FY24 to rupees 4,003 million in 9 months FY25, demonstrating sustained momentum in our core business operations in line to the guidance that we have been giving for the last few quarters. For 9 months FY25, EBITDA increased by 69.1% to rupees 932.2 million as compared to rupees 551.2 million in Q3 FY24, while EBITDA margin remains stable at 23.3%, demonstrating our commitment to operational efficiency and profitability. For 9 months FY25, PAT increased by 133.2%, amounting to 424 million as compared to 181.8 million in 9 months FY24, with PAT margin improving by 290 basis points to reach 10.6% in 9 months FY25. Now let's have a look at on the Q3 FY24 versus Q3 FY25 versus Q3 FY24. In Q3 FY25, our revenue saw a significant increase of 62.5%, reaching 1,483.9 million compared to 913.4 million rupees in Q3 FY24. This growth was driven by successful execution of our order book, reflecting strong demand and operational excellence. Our EBITDA also showed remarkable growth, rising by 58.1% to rupees 379.6 million in Q3 FY25. while the EBITDA margin remained stable with a minor decrease of 70 basis points as compared to Q3 FY24 and stood at 25.6% in Q3 FY25. Additionally, our PAT for Q3 FY25 amounted to rupees 182.4 million, a substantial increase of 83.1% from 99.6 million in Q3 FY24. The PAT margin improved by 140 basis points to reach 12.3% in Q3 FY25. I also would like to specifically mention that this is the highest ever recorded Q3 performance in the history of Apollo. Now let's move on to investment in capacity expansion and strategic tie-ups that we have made recently. As we have been informing you that we have commenced our expansion plans, few years back, and our Unit 2 facility was getting ready. Now presently the Unit 2 facility is ready, and we have performed puja for taking position. As this is the Q4 quarter, shifting teams would disturb execution in crucial fourth quarter. Hence, its operation will commence from Q1 FY26 actively, although some composite productions already started here. In case of the Unit 3, which is a 350,000 square feet facility, which is constructed in Hardware Park 2, Hyderabad, very close to Hyderabad International Airport. And as a part of our forward integration focus for weapon integration, we commenced construction of our integrated plant for engineers defense system IPIS, which is Unit 3, and this is expected to be completed by Q2 FY26. I am very happy to share with you that we have recently entered into a consortium agreement with Redon Systems Private Limited to collaborate on a manufacturing partnership for loitering munition. We are also pleased to share with you that we have signed an MOU with Garden Reach Shipbuilders and Engineers Limited. It's a dockyard, Government of India. This MOU establishes a business partnership focused on joint research and development, co-production and export of underwater weapons and vehicles, underwater mines, underwater communication systems, and air defense systems. Some of the display models will be unveiled during the Aero India 2025, which is commencing from tomorrow, day after tomorrow, 10th February, and will be up to 14th February 2025. I would also like to make a special mention that our company consistently invests close to 7 to 8% of our revenues on R&D every year in developing new technologies and in augmenting new technologies, existing technologies. Keeping the same momentum, we would like to increase our investments in R&D, but at the same time, developing the product and also qualifying and testing the products, particularly in case of platforms, needs much more investment. It also needs bandwidth and also some bigger umbrella. Keeping that in view, and the kind of new platform development that we would like to undertake in the years to come, we are entering into this R&D partnerships with the different public sector companies. To mention, we already have a joint development MOU with Bharat Dynamics Limited. Now we have entered a joint development MOU with GRSE, and such MOU with many other private as well as government companies will be entered in the future, as we have a very, very strong foothold in technology development and a strong R&D team with us. By entering such partnerships, we will be able to open a much larger testing platforms availability for us in the years to come, and also an access to much deeper markets, both domestic as well as international. We are also excited to announce and at the same time invite you all for the upcoming Aero India 2025, in which we are participating, which will start from February 10th up to February 25th, so 14th, 2025, in Bangalore. We look forward to connecting with you there. Thank you all for your continuous trust and support bestowed on us. We now look forward to addressing your questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Mayank Kapoor, an individual investor. Please go ahead.
Hello, am I audible?
Yes, please proceed.
Yeah. First of all, congratulations on a fantastic set of numbers, sir. I went through the PPT and there are some very interesting and esteemed set of projects that we have done, and we have listed our whole process from ideation to commercial production. I just want to understand and appreciate what is that Apollo Microsystem does. So can you walk us through a whole life cycle of how a project starts and the final delivery? And there are a bunch of services that we offer, right? Electronic manufacturing services, hardware design services, and so on. Can you also tell us that in case every product goes through each of these processes, or is there any kind of product which contributes more towards our service?
Thank you, Mayank, for participating, and I would like to clarify you that primarily we are not a product company as such. Although we will be rolling our own platform products in the years to come. Many of the technologies that we are developing are specific to a specific program of DRDO. In many of the cases, we undertake development of different LRUs, which we call as the line replaceable units, which are subsystems on board a weapon or on board a vessel, like maybe a ship or a submarine, or maybe on a torpedo or a ground launcher system. So we undertake development of a specific system for that program. We develop that system specifically for that program. We also participate during the testing and trials of the program. And once the program gets into production phase, we support in producing that in numbers to whoever may be the production agency in producing that weapon or a vessel or a platform. So earlier, only companies like Bharat Dynamics Limited used to have a mandate for producing the weapons. But nowadays, Government of India Ministry of Defence is encouraging a lot of private players. That's how the big players, deep pocket players like Adani, Bharat Forge, Economic Explosives, these companies were given an opportunity. They are taking a TOT for production from DRDO, and they come back to suppliers who have got qualified and who are an approved part of the supply chain for that program. So this is how it is. So whatever we have mentioned that we do a hardware design service, software design services, this is apart from the product development or technology development that we do specifically for the programs. Any specific design services that we have had to offer for any specific customer who comes with a request, we would be doing that. So EMS is not, doesn't generate a lot of business for us to start with. We develop the systems and we produce it by ourselves, but we also support some other,
Sorry to interrupt, sir. Your voice is breaking.
We also support some other customers in producing their system as part of our EMS services, but it is not a major business for us. But yes, we do product development right from ideation, which is right from the concept, up to a final product qualification and testing. And we also offer services like a build-to-print services, which is the EMS service, or hardware and software design services.
Got it. Got it, sir. Thanks for the detailed answer, sir. Next question that I have is that, given that we have an order book of 500 to 550 crores, can you tell us the distribution by the services that we offer or the defense areas that we are targeting? For
No,
example,
there's
arms
not.
and ammo.
No, there's no breakup that we are giving at this point of time. We are restricted to share certain information, so I'll not be able to give you a breakup at this point of time. But services, doesn't contribute much, which I already told you. Most of these are, what do you call, system development programs, over which this entire thing is spread. But broadly, I can tell you that majority of the business comes from the missile defense as well as from the naval defense areas.
And is that the same area that we are targeting to increase our order book substantially? I saw one interview where the management had said that current order book is 500 to 550 crores, and by December 25, we want to take it up to 2,500 crores minimum. So is that the area that we are targeting for that, sir?
Naval defense is one area where we have developed the complete platforms, like a complete underwater mines we have developed, and where we are expecting a large ticket projects. So naval defense will continue to dominate to certain extent for next 1.5 year in the increased order book. But at the same time, missile defense programs also, one after the other, the programs are getting matured. Recently, you might have observed that Ministry of Defense has placed orders for Pinaka weapons. So we also have some contribution in that as well. So missile defense is also going to anchor the overall increase in the order book over a period of time.
Got it. And last question from my end, sir. So the FY26 guidance that we have given is 100% internal target, but it's more of like a 50% target. I just want to understand if you can give us any margin guidance, whether it be a EBITDA guidance or PAT guidance.
No, I have never given an EBITDA or a PAT guidance earlier also. The revenue point of view, we have earlier informed that we have an internal target to double our revenues, but as a guidance point of view, 45 to 50% is something that we will continue to increase our revenue by 45 to 50%. That's the only guidance that I can give you at this point of time.
Got it. That helps, sir. Thank you. Those are all my questions. Thank you.
Thank you. Next question is from the line of Ankush Agarwal from Surge Capital. Please go ahead.
Yeah. Hi, sir. Thank you for taking my question. So the first question is around the new order wins. So, I mean, in the recent interviews, you have been stating that you expect a couple of thousand crores of new order wins for you. You sort of also mentioned that some of your customers have also already received these orders, and you are just waiting for them to pass on the component part to you. So, could you give some sense on what kind of visibility we have on receiving these kind of, more than 1,000 crores kind of orders that you're talking about?
No, there are two different aspects of it. One is an order we are expecting from Indian Navy very shortly. That's a direct order from Indian Navy to us. Apart from that, there are certain orders which we are already executing as a sample orders, but a complete large order is existing with our customers. Generally, being a Tier 2 and a Tier 3 supplier, customers doesn't place a direct, completely full quantity order to us on a full throttle basis, because we will end up producing very fast, but they, as a complete system integration, it will take a lot of time for them. So that was the perspective in which I might have told you, and I also want to clarify now. But yes, we have presently an very robust order book. At the same time, the orders that my customers are already having, which are yet to flow to me, are also very strong, and some very large ticket projects are expected from Indian Navy.
Okay. Okay. The second question was, sir, on the margins. So if I look at some of our listed peers, on the production side, they make as high as 35-40% EBITDA margin.
We currently are at about 20% EBITDA margin, and sort of in the annual report, we have also mentioned that once the share of our production revenue increases, we expect increase in EBITDA margin. So, going ahead with this kind of order wins that you're looking at, do you believe that our margins could scale up to the 30-40% EBITDA going ahead once we see this large production orders coming in?
See, on a standalone basis, it depends on the product mix, where the revenue gets booked actually. Different products that we supply will have a different EBITDA margins. So some of them can go as big as 40 to 45%. Some of them can go lesser than 20% in some cases where there is a product development, initial stage of the product development. But it is whatever figures that you are seeing, these are the complete revenue figures, averaging of that, each product mix that is contributing to the revenues. So the peak of 26-27%, whatever is there, that will continue to maintain, and it will go up to 30% on a balance sheet basis for next one and a half year. Going to 40-45%, it will take some more time.
Okay. Okay. But it is possible, right, in the kind of orders that you have?
Yes. See, majority of the projects that we are executing today, they're all development projects. Either the system which I am supplying is in a development phase or the program is in the development phase. But as my revenue, overall in the revenue mix, once the production order sizes goes up, then that is the one which is going to anchor the EBITDA margin levels, which will increase the EBITDA margin levels. But it is not something that, by 10-15% it is going to, grow in within one and a half year, financial years or something like that. It will take a little more time, for things to get into production. Our new facility is also getting ready. New opportunities are coming actually. So we would be happy to share as and when the event happens. But at this point of time, I think anywhere between 26 to 25 to 30% is a very decent EBITDA margin for our size of balance sheet.
Got it. So, sir, would it be possible for you to share what is the current mix between production orders and development orders? I'm assuming majority will be development.
Broadly, in terms of percentage, I can say 75-25, 70-30, like that.
In favor of development, right?
Yeah, development come and production percentage.
Okay. Okay. So the last question is, so you sort of indicated the areas wherein you want to invest the funds that you have raised. So would these partnerships require you to immediately invest this kind of large sums, or this would play out in a couple of years while the program develops? Like, I'm trying to understand why we have raised so much of money, about 800 crores upfront. Like, is there an opportunity wherein we will have to invest this kind of sum immediately, or what's the thought process behind raising it immediately?
You mean to say expansion of our Unit 3? Are you talking about that?
No, you indicated that you want to enter into partnerships with these private firms and government firms to do joint production and development, and that would require you to expand your R&D budget, which sort of you indicated is why you have raised the 800 crores that you have raised. So just wanted to understand, would this partnership require you to invest this kind of money upfront, or there is some other use that you're looking at for this money that you have raised?
So so you're talking about the fundraise that we are doing on different basis, right?
Yeah.
Okay. So we have given a clear breakup of what the utilization of the funds, where we are going to do actually. 550 odd crores will be going for the working capital, and 66 crores we will be investing in our subsidiary for some acquisitions and other things like. And around 130-140 odd crores for general corporate purpose, and some of the the balance of the funds we will be investing in R&D. As I already informed you during my opening speech, that we have entered the MOU with GRSE and other companies, and few more other companies we are likely to enter shortly. Negotiations are going on. As and when the event happens, we will keep you posted. Next year, probably we may be investing close to 100 crores on R&D in new product development actually. So this is broadly the breakup in which the fund utilization will be there. The disclosure is already given in the to the exchanges.
Okay, got it. Thank you. That's it.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please restrict your questions to 2 per participant. If you have any follow-up questions, please rejoin the queue. Next question is from the line of Rupesh Tatia from Intelsense Capital. Please go ahead.
Hello, sir. Am I audible?
Yes, please proceed.
Yeah. Thank you for the opportunity, sir. My question is on your presentation. There is a slide number 10, where you have listed all these missile programs, right? It looks like we're part of all the missile programs, but I don't know what is the component that we supply. Do we supply some electronics component in that, or some mechanical systems in that? What do we supply to these missile programs that you have listed on slide number 10?
So I will tell you like this, sir. Except for the BrahMos missile, okay, where we have a very, very insignificant contribution, very little, rather I would say, there is no indigenous missile program of DRDO where we do not have a participation. So that's a very unique positioning that we have in terms of the market share for the indigenous missile programs. That's point number 1. Point number 2, to specifically answer to your question, we have over a period of last 40 years developed an expertise, and individual groups are formed to handle different type of technologies for the system which form part of a weapon. Right from the explosive area, where we are not into explosives, but the detonation of the explosive, like safety arming mechanism. Next comes the seeker section, where the signal processing portion we are doing, and various onboard computer instrumentation systems, navigation systems, telemetry systems, data link systems, actuation systems. Like this, different onboard electronic and electromechanical systems form part of a weapon actually. All these technologies we have developed expertise. Our systems are part of all these programs. We are not purely into mechanical machining and engineering. We do have a CNC and tool room in-house for our captive requirement and for our own, making, but we don't do heavy engineering mechanical items, for these programs. This is answer to your question.
So just a small follow-up to that, sir. Are you like a single source supplier for whatever components you have developed for these missiles?
No. See, normally what happens, most of the programs, they undergo on a tendering basis, either a limited tender or an open tender, depending upon the type of the, technology. They reach back to the mature players, or maybe sometimes for an L1 requirement, 4 or 5, minimum participants will have to be there. So they qualify and they give opportunity to them and all like. So once we become an L1, we have to qualify the product. Once we qualify the product, we become a proprietary partner for them. So in case the program size is very, very large, which is getting produced in tens and tens of thousands of numbers, sometimes, the DRDO will encourage more number of players, to be a participant, because they cannot rely on one single source. But many of the programs that we are participating, we are not participating in a C-level, kind of, technologies. We are participating in most significant technology, which is forming part of the weapon. And we enjoy the proprietariness in that as and when the product gets qualified. This is how the supply chain goes in the programs.
So, sir, what kind of market share do you anticipate? That is one. And then my second question, sir, is on the Pinaka missile, right? Not guided Pinaka. I think guided Pinaka, there is still some time for the large tender, but this whatever 10,000 crore Pinaka tender has come. What are the components that we supply in that tender? So these are my two questions, sir, small questions. Yeah.
Unguided Pinaka, we do not have a contribution. Guided Pinaka, we have a contribution.
So this 10,000 crore tender is for unguided Pinaka, right?
Yes, yes.
Okay. And sir, what kind of market share you expect for in the missile programs? And you are at least.
See, ascertaining market share is very difficult until the programs gets into production phase. Okay. So at this point of time, I can only tell you that every weapon program we have a contribution. Wherever there is electronics requirement is there, there we have a contribution every missile program, and all indigenous torpedo programs we have contribution. The indigenous nuclear submarine programs we have a contribution. We are the only company in India developed all varieties of underwater mines. Okay, we have contribution expendable decoy programs, underwater swarm drones. So variety of such programs we have developed technologies and we have contributed. Ascertaining the size of the market share can only happen once these programs gets into a production phase actually.
Okay, sir. And then just the final question, sir, is what would be the range of contribution per missile? Is 1 crore to 5 crore a fair number, or is that like too large?
As small as 1 lakh to 5.5 to 6 crores.
Okay, sir. Thank you. I have more questions. I'll come back in the queue. Thank you.
Yeah.
Thank you. Next question is from the line of Alisha Mahavla from Envision Capital. Please go ahead.
Hi, sir. Good morning. I hope I'm audible. So first, we just wanted to understand this consortium agreement with Redon that we have recently entered into. If you could give us some details of the platform. It looks like that the development is done by them. What is is it expected to go into production soon? How large will it be? What kind of competition will it be? If you could share some color on it.
No, I will not be able to quantify because we are going to jointly bid for some programs and jointly manufacture these systems actually. So it's in a very beginning stage, but Redon has already developed the loitering munition. They have done some testing. They have already given some trials to Indian Armed Forces. They have joined hands with us, keeping in view of our existing experience in manufacturing weapon systems and the scale of operations that we are going to have in few months to come, and the financial bandwidth that we have. They have certain strengths, we have certain strengths. Now the entire defense ecosystem is getting into an era of doing things on a consortium basis, where they will be able to catapult on leveraging on each of their strengths actually. So as a part of that, we have come together in addressing this for the upcoming programs actually. We'll be doing a joint bidding. This is what I can comment to this extent only on this relationship.
But this is not in any advanced stage where maybe we can expect orders next year, right? Because you said that these are still very early stages.
Advanced to early stage, has a very thin line actually. Okay. But currently we are about to, bid for some programs, and it's a matter of a month or two, for them to get finalized. If it gets in favor of this partnership, I think then it's an order for the companies.
So, and just a clarification, the products that they have developed, are these approved by Indian Army? Do they have the required?
It's not like that, See, in case of the direct armed forces, there is nothing like an approval from the army and all. It is not like that actually. Okay. So there is a process with which they do a shortlisting, then they take up trials and testing of a few numbers, and then they will give a go ahead for production. Every armed forces have a different mode of this thing, but presently Redon has some matured systems available with them. and which can get qualified for the programs that we are attempting jointly.
Understood. And the underwater mine order, can we expect it before March, or is it looking like there could be some delay and spill into next year?
I am not sure if I can comment on that. It's a process going on inside the Indian Navy. I have to restrict, the timing, to tell you the timing of it as of now. But we were expecting it before March itself. But as the weeks envelop, we will get to know more information on that.
Okay, thank you.
Thank you. Next question is from the line of Nikhil Chandak from JM Financial Family Office. Please go ahead.
Yeah, hi, thanks. So, one question, and I may have missed this in the opening remarks. Now, you said that almost 550 crores you will be using it for working capital out of the new fundraise. And what I see is that, say, the annual revenue is currently in the range of 500 crores. So such a large amount of capital which will go into, working capital going forward from the fundraise. So just trying to understand what kind of growth rates are you expecting for the company, say, over the next 2-3 years? So at least as a business plan, if you have to see where does this 500 crore approx annual revenue kind of move to, say, in the next 2-3 years based on the visibility which you have? And I'm presuming because of that you need this high amount of working capital investment.
Yeah, see, I would like to clarify like this. Firstly, we are in working capital intensive industry, point one. Point two, it is not that the funds get churned multiple times in a year in my industry actually. The existing lead times of certain raw material are as small as a couple of weeks to as big as 2 years actually. Okay, so we will have to invest ahead if we have to keep up with the production lines. That's the reason we have started raising funds so that we will be able to address the addressable market on time and give it the deliveries. That's another point. Third point is that we have kept the targets of doubling our revenues for next financial year, but as a guidance we are only giving that we will be able to achieve minimum 45 to 50% growth for the next financial year, and this is something that we will be growing continuously. And the size of the order book will also grow multiple times in next 1 year down the line. So keeping all that in view, we will have to gear up in sourcing the raw materials on time and making it delivered. There are certain items which go for an export control approval from the respective Department of Defense of respective countries, which by itself is taking nowadays 3 to 4 months, owing to multiple wars happening in the different parts of the world actually. So all these is actually getting delayed. There is a trade war happening, there is a semiconductor war happening, there is an actual war happening. But the flow, there is no embargo of selling the goods to India. That's one good sign of relief for India as a country. But there's definitely there is a lot of delay. So the delay should not delay the program as such. We have to make at least a just in time kind of a delivery commitments that for us to give to the customers. We have sourced these funds, and the funds will be used for the purpose of sourcing it ahead so that we are able to do the production seamlessly.
Understood. So you're saying you could reasonably grow, say, 40-50% for the near term based on the visibility which you have at this point of time.
Yeah, that's the guidance that we have been giving the last few quarters, and I stand by that guidance.
Understood. Perfect. Great. Thank you so much. I'll come back in the queue. Thank you.
Thank you.
Thank you. Next question is from the line of CA Garvit Goel from Invest Analytics. Please go ahead.
Hi. Good morning. Am I audible?
Yes, you are.
Congratulations for a decent set of numbers, sir. Firstly, on the this year guidance, you have been guiding for almost 45 to 50% kind of growth. Even if I take the 45% growth, you should reach 540 CR, right? And in first 9 months, I think we are at 400 CR. And even if we replicate this quarter number in Q4, we will easily achieve the guidance. But looking at your historical numbers, Q4 is, I think, significantly differing from all other 3 quarters in the terms of size of revenues. So, would you like to revise the guidance for this year, sir?
No.
We will be having a similar kind of quarter for Q4, right?
Yeah. Generally, and Q4 is always an anchoring quarter. Okay. And I don't think I feel any necessity that I need to make a revision to my guidance actually. So Q4 is always an anchoring quarter for the entire financial year. And I don't think any change in my outlook is required actually. So my if I see the quarterly this thing of the Q4 March 2024, it's 135 crores.
I see that. That's what I was asking for, whether there is any upward revision going to be for this year. That's fine. Secondly, on the pledge percentage, sir. So this pledge percentage is increasing. So can you put some color on what is the rationale behind it, sir?
What percentage?
Pledge percentage. Promoter pledge percentage is very high for our company.
Promoter has pledged shares, to because he was sourcing funds to subscribe to the warrants. We have gone for a preferential around a year and a half back. Then once again now we are going for preferential, to subscribe it. He has gone for nothing for any personal reasons.
Got it, sir. And lastly, on the naval orders that you are saying we will be expecting it maybe this year itself. Is it like the internal revenue target that you are having 100% kind of growth in FY25, FY26, sorry, that is based on this order? Like, is it if it comes in the near term, we will be able to execute in FY26, and if it comes later on, I think 45% guidance. Is it going to work that way, sir?
Partially, you can take it like that, not fully. If it comes, at least even in the Q1, so I will have some revenues booked at least by Q3 or Q4 of next financial year. Okay, because once the order comes, it will take 6 months for us to create the documentation, take certain approvals and other things like. So Q3, Q4, some revenues will start flowing, and for the next after financial year, it will definitely continue to have. But we are also expecting some more orders, as I told earlier also. There is an existing order book with my customers. We foresee that they would like to expedite their production, overall production requirements and enhance their production capabilities also for the next financial year. If that event happens also, that will also contribute for me in achieving my internal targets. But irrespective of that, my 45% growth, whatever guidance we have been giving, that we will achieve for sure.
Got it, sir. And one more thing on the margin side. You mentioned 25% to 30% kind of EBITDA margin. I think this must be supported by the kind of mix we are going to achieve in the production contract. So is it like from the this quarter onwards, we can expect slight improvement in our EBITDA margins going ahead?
I will not be able to comment on that, sir.
Okay, sir. That's fine, sir. All the best for the future, sir.
Thank you.
Thank you. Next question is from the line of Aman Vij from Astute Investment Managers. Please go ahead.
Yes, good morning, sir. My first question is, when you talk about our missile contribution ranges from couple of lakhs to few crores. So if you can talk about some of the programs which is coming online in next 1-2 years, where our contribution is high and their volumes is also expected high, basically which will move the needle for the company.
Um, Sir, unless the program is getting into production, I am restricted not to talk about it actually. But most of the things nowadays are in the public domain, sir, actually. So there are certain, I mean to say, news articles coming from directly from defense, how, the steer up is going to happen and all. Like, for example, the current Pinaka program, it was expected of that it would come, but we have not expected that it would come this month itself, actually. We were expecting by March end or so. So government is taking their own call. But broadly to tell you, the artillery and bomb programs are the ones which are going to have a very large quantity in the years to come. So those are the programs which will have big numbers, coming. Apart from the other programs like, the naval torpedo programs like the VAS, the electrical heavyweight torpedo, these are the programs which will also getting into production areas. NAG is something also which will go into a good sizable production. But there are certain other areas like the ballistic missile programs and other things like, there's a continuous production continuously happening for that, and I will not be able to comment on that. The ATGMs are the ones which you can keep a track on that. NAG, Helena, and IMP ATGM and Amoga too. These are the ones which will also get into large numbers in the years to come.
And these programs which you mentioned, NAG and Amoga 2 and ATGM, our contribution is significant. So the total value of whenever it happens can be significant for our company.
I don't want to quantify it, sir, as of now, because the transcripts are available will be available in the public domain. It will be against the competitive, spirit actually.
No, without value, sir. I am just asking, whenever it happens, it will be a good chunk for our company. I am not asking for.
Yeah. I want you to understand like this, that when the quantities are very high, okay, the overall revenue chain value will always be on a higher side. Okay. If a program is getting into some 10,000 numbers, okay, assuming that, every company is getting at 1,000, 1,500, 2,000 numbers kind of a this thing, but at least, as small as, 5 lakhs to as big as a crore rupee kind of a this thing, that's the kind of a potential every company is going to have. The entire ecosystem is going to have such kind of, opportunities coming in depending upon the type of the, product mix that they are supplying. So why I mentioned only these programs is because these are the programs which are of highlight, which are getting into a very large scale production in the years to come.
Sure, sir. My next question is on torpedo side, sir. So last set of orders we supplied, I think, was for Varunastra. And I think we are waiting for this electric heavyweight torpedo and also advanced light torpedo. So, is there any repeat order expected for Varunastra also? And if not, then when do we expect the big orders coming from electric heavyweight torpedo? Do we expect it in first half of this calendar year or second half of this calendar year?
Varunastra entire weapon is being done by BDL, sir, actually. I am restricted to, comment on that, but, yes, there will be a repeat order for Varunastra coming shortly.
And what about electric heavyweight torpedo and ALWT, the lightweight torpedo?
ESWT is a sensitive program, sir. I will not be able to, tell you the timing of that. ALWT, we'll start getting some limited series production by Q3 or Q4 of next financial year.
And sir, electric heavyweight?
Pardon me?
Electric heavyweight torpedo. ESWT.
Electrical heavyweight torpedo, I told, sir, it's a sensitive program. I will not be able to comment about it in the timing of that.
Okay, sir. No issue. Final question is, so the
But the
current
approvals are all done. The trials are all more or less done, actually. So from our end, there is nothing, some paperwork is going on. Broadly, I think, that level understanding is sufficient.
Okay, sure, sir. Final question I have is on this production and prototyping mixer. So currently it is around 75-25. So for next year, FY26 and FY27, where do you see this mix going?
60-40.
60-40 for FY26 as well, sir?
I'm talking about the next year only, not this year. This year is almost over now, sir, actually.
Yeah. And FY27, can it move to 50-50 kind of number as well? By 27, 2 years.
I am unable to give the guidance for FY27 how much the percentage would be, but for FY26 it could be like 60-40.
Sure, sir. I'll get back in the queue. Thank you.
Thank you. Next question is from the line of Prathamesh Diwar from Tiger Assets. Please go ahead.
Yeah, sir, just two questions on the defense industry side. So first one is how are we seeing the order inflows in the industry? Are we seeing any delays or what's the current situation over there? And my second question is on the payment side. So are we seeing any payment delays from the government?
No, sir. Most of these programs are DRDO programs. So the fund is already allocated. There is no dearth of payments. The payments are seamless, actually. There is no issue. The order flow is going to be much more consistent with many of the programs getting into production, and also because of the entry of private industries getting into this, with having their skin in the game, in line with the government expectations, if they are able to steer up the production capacities and other things, much more consistent orders will be there, and much more increase in the order book will be there for the entire ecosystem as such.
Okay, sir, got it. Yes, sir.
Thank you. Next question is from the line of Prateek Bagadia, who is an individual investor. Please go ahead.
Yeah, hi, sir. Thanks for giving me this opportunity, and congratulations on completing 40 years of operations in this industry. So my first question is with respect to exports. Are we doing any exports, and can you throw some visibility as to how it looks in the next 2 to 3 years?
Presently, we are talking to few countries, for, we have given our proposals. We expect that, we will be able to back some orders in the next financial year, execution of which may happen maybe next after financial year. About next financial year, whether we'll be having export or not, I'm not sure of the timing.
Okay, I understand, sir. And so my second question, I just want to understand as to how typically our order flow looks like in terms of when we get an order, what is the completion time? What is the lead cycle to it? I understand that the multiple orders would have multiple timings, but if you could throw a generic light on it.
Average, you can take anywhere between 6 months to 12 to 14 months.
Okay, so typically once we get an order, it takes around 1 year for us to deliver it back to the customer. Is my understanding correct?
No, not necessarily. Not in all cases. Certain cases where it's a fresh order and we need to source material and all, the timing of sourcing of the material and all may take some time. But there's some orders, short term, where we have some stocks. We have a huge inventory available with us. So, the execution, that's why I told you, the execution is right from 6 months up to 12 to 14 months. That's the way you have to understand it.
Okay. And so what is our current capacity utilization?
See, we are not a product company to assess the capacity of the company and its utilization, actually. So it depends on the product mix. There are certain, items, that we produce, that I can produce in a month, I can produce more than 1,000 numbers, but that's not the requirement it would be actually. So this is not something which can be ascertained as a capacity utilization.
Fair
If
enough.
whenever you have a time, when you come to Hyderabad, you can visit the plant. I will explain you more in detail. Because even if I explain it now, you will not be able to visualize and understand what it is meant by actually.
It will be pleasure for me, sir, to come and visit the plant. So my final question, current promoter pledge part is around 33% as of December. Any plans of bringing it down to 0%?
In next 1 year, on a phase by phase basis. That's what we are working towards.
Thanks a lot, sir, for answering all the questions, and good luck.
Thank you so much.
Thank you. Ladies and gentlemen, we will take this as the last question for the day. I would now like to hand the conference over to the management for the closing comments. Over to you, sir.
Yeah. Are the questions exhausted?
Yes, sir. We will take this as the last question. Over to you for the closing comments.
Okay. So thank you very much to all the investors and team Anand Rathi, my colleague Rukia Paveen and Tanya Gupta, my IR team, for participating in today's conference call. We are committed for continuously improving our performance, and we also assured you that we will make every effort to achieve much better results moving forward. We are confident that the upcoming quarters will also bring positive outcomes, with Q4 expected to surpass Q3 in performance, which has been tradition earlier as well. Overall, we are on track to deliver stronger results compared to last year. We deeply appreciate the unwavering support we have been receiving from all our investors over the past few years. We look forward for your continued confidence in our efforts. Thank you once again, and we eagerly anticipate reconnecting with you for the Q4 update. Wish you all a wonderful day ahead. Jai Hind.
Thank you. On behalf of Anand Rathi Shares and Stock Brokers Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.